Money in Motion: Why Streaming Wealth Changes Everything. Section 1, Introduction. For most of modern history, money has been treated as a static object. It sits in accounts, moves in batches, and is observed through periodic snapshots, monthly paychecks, quarterly dividends, annual statements. This model shaped not only banking infrastructure, but also how individuals, institutions, and regulators understand economic activity. Streaming wealth challenges this assumption. Enabled by blockchain-based representations, it reframes money as a continuous flow rather than a static balance. Value no longer arrives in discrete intervals. It moves persistently, measurably, and programmatically over time. This shift is not merely incremental. It represents a change in the medium of finance itself. A useful analogy is cinema. Early photography captured moments. Motion pictures revealed stories. In the same way, streaming wealth turns isolated financial snapshots into an ongoing economic narrative. Section 2, From Static Balances to Financial Flows. Traditional finance is balance-centric. Accounts are reconciled at specific moments, and meaning is extracted from end states rather than from paths taken to reach them. A paycheck appears, sits idle, and is later depleted. A loan balance updates monthly. Risk, creditworthiness, and liquidity are inferred from sparse data points. Streaming wealth introduces a flow-centric model. Value is continuously accruing, transferring, or decaying. Time becomes a first-class variable. Instead of asking how much money someone has at a given moment, systems can ask how value moves through time. This distinction matters. Flows can be analyzed statistically, forecast probabilistically, and adjusted dynamically. Balances cannot. Streaming converts money from a static state into a process. Section 3, Why Blockchain Enables Native Streaming. Streaming wealth is not simply faster payments. It requires a substrate where value can be represented as a continuously updating state. Blockchain systems provide this natively through bearer assets rather than account-based claims. Smart contracts that encode time, conditions, and automation, and permissionless settlement without custodial intermediaries. Traditional banking can approximate streaming through scheduled payments, application programming interfaces, or custodial advances, but these remain simulations layered atop batch-based infrastructure. Blockchain, by contrast, treats streaming as a protocol-level primitive. The asset itself can be programmed to flow. This architectural distinction is why streaming wealth emerges naturally in crypto systems rather than being retrofitted into legacy rails. Section 4, Streaming Wealth as a New Financial Content Type. Streaming wealth is best understood as a new financial content type. Just as motion pictures emerged from sequencing still images at sufficient frame rates, streaming wealth emerges from sequencing value transfers across time at high granularity. Once this threshold is crossed, new properties appear. Memory, where flows retain historical context. Narrative, where patterns reveal behavior rather than just outcomes. And expressiveness, where value can encode intent, usage, and constraints. A balance tells you where someone is. A flow tells you how they live economically. This shift from snapshots to narratives fundamentally changes what finance can see and do. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. Section 5, Economic and Individual Implications. For individuals, streaming wealth reshapes income, savings, and access. Real-time income streaming allows wages, dividends, or royalties to arrive continuously rather than episodically. For gig workers or irregular earners, this produces a persistent income signal rather than sporadic deposits. Statistical tools can be applied to these flows to assess earning capacity probabilistically. This enables microloans tied to real-time income, credit based on earning trajectories rather than static thresholds, and reduced default risk through continuous settlement. Streaming wealth converts economic noise into analyzable signal, expanding access for those historically excluded by snapshot-based finance. Section 6, Machine Economies and Economies of Scale. At sufficiently low transaction costs, streaming enables machine-scale economics. Micropayments can flow between artificial intelligence agents purchasing data or compute, robots paying for energy, insurance, or maintenance, and autonomous services compensating each other per second of use. Because costs scale down with granularity, services become more accessible and inclusive. Human users benefit as well: lower fees, pay-per-use models, and reduced capital lockup. Streaming wealth aligns economic cost precisely with economic usage. Section 7. Institutional and regulatory perspectives. For institutions and regulators, streaming wealth provides observability. Instead of relying on delayed reports and aggregated statistics, regulators can observe real-time flows, where money concentrates, where bottlenecks form, and where stress accumulates. This creates the possibility of precision intervention rather than blunt policy tools. Crucially, this is not about surveillance for its own sake. It is about resolution. Higher temporal resolution improves understanding, just as higher frame rates improve video clarity. Streaming wealth turns the economy into a live dashboard rather than a rearview mirror. Section 8. Trade-offs, constraints, and open questions. Streaming wealth is not without challenges. Volatility, depending on asset choice. Privacy, requiring cryptographic safeguards like zero-knowledge proofs. Infrastructure gaps, especially in underserved regions. Usability and education, necessary for mass adoption. These are not refutations of the model, but constraints that shape its evolution. As with any new medium, early limitations do not negate long-term transformation. Section 9. Hybrid futures and system convergence. The future is unlikely to be purely crypto-native or purely legacy-based. Hybrid systems are emerging: banks integrating tokenized assets, fintech platforms bridging streaming protocols and compliance, governments experimenting with programmable money. Over time, streaming is likely to become a default expectation, regardless of rail. The question is not whether money will stream, but who controls the architecture by which it does. Conclusion. Streaming wealth represents a shift from static money to temporal money, from balances to flows, from snapshots to narratives. Blockchain did not merely speed up finance, it changed the medium in which finance operates. Like the transition from photography to cinema, this change unlocks new expressive power, new analytical tools, and new forms of inclusion. Money in motion does not just move faster, it tells a story, and that story changes everything.